Good morning, everyone. And it's a great pleasure for us to have Mr. Niranjan Hiranandani here on stage to discuss what's happening in the real estate sector. And I think, Mr. Hirandani, we are meeting at a day where there's a lot of, at least some positivism after a very, very long and turbulent war. There is some sign, I mean, there are definite signs that finally we are going to have more peaceful times. And also, it's a great day because the NSE is planning to list, and I think it's a big cheer for the markets overall. My question to you is, now that we are slightly coming out of, the big rut that we have seen in real estate, in the geopolitics, how does the real estate look like? Because not long ago, we were in a phase where we could see very, very tough times. We saw how in the Middle East, especially in Dubai, which is one of the hottest real estate sectors, we have seen, how things have tumbled there. Now, is it everything looking up right now? What is your view?
Thank you for the inviting me over here today. It's always a pleasure to be here with India today. Uh, Geopolitics has been really shaking everybody up. One thing which is positive, in spite of the shake-up, was the fact that in the last quarter, we still had a growth of 7.4% GDP growth. So that was in spite of the contrarian winds which were there. So I think that's a positive. The second part is that in the last 2 years, real estate has grown 10% and 12% growth in terms of numbers, also in terms of values. So both these aspects of it have moved forward. The third important factor is urbanization. Urbanization is moving faster and faster. In the next 15 years, 50% of the population will be urbanized, where today we are close to 42%, which also is a growth from 34, 35 to 15 years ago. So I think that urbanization is taking place. Fourth aspect of it is the fact that infrastructure is developing. So let's look at the country. We have 35 kilometers of national highway being added every day. In the next 4 years, we'll double the number of airports that is taking place. We are improving number of ports. Look at Mumbai region. We are in the next 2 years, we will add 300 kilometers of metro. In contradiction, we had 190 kilometers of suburban rail for the last 65 years. And in next 2 years, we add 300 kilometers. We also will get a new connectivity. We have a second airport. We have the coastal road, which is up till now up to Bandra, which is going to Versova, Kandivali, and going up to Bhinder. On the other side, we have the Cross Harbour Bridge, which opens up land equivalent to half the land of Mumbai. We have the second airport, and we are planning the third airport in the Mumbai region. So overall, if you see, there is a development which is taking place, which is high. Whenever development takes place, whether it's in Dubai, whether it's in Singapore, whether it's in any country of the world, China at that time, the growth of real estate will take place at a faster pace than the growth of GDP. My reading is that if we continue to invest into infrastructure, if we continue to invest into various manufacturing, which we are planning to do, and the direction of Atmanirbhar Bharat, real estate from next year onwards will grow at a compound of 15 to 17%. That's the rate of growth that we anticipate for real estate to take over. And definitely there is one aberration. So with all the positive stories that I put in, there is one negative story which worries me tremendously. And that worry is the fact that in the last 2 years, affordable housing numbers have come down by 20%. Unbelievable. I mean, I would have always believed, and my 45 years of experience indicates to me that affordable housing should have also grown at least by 10%. It's a contradiction. We have 20% dropped in affordable housing. And I think worry for the government, for the industry, because you can't not provide for affordable housing in the country. And that is a challenge we have. Of course, we have the PMAY scheme, we have the regulator, all these other factors are there to try and match up for that. But it's still not working. So we will have to, as government, as NAREDCO, as CRIDAI, all the bodies have to sit together, find a solution for this and do it. So lots of positive in the real estate market in the next 2 years. Fantastic, in fact. I think the opportunity is not, I mean, I can't think of any other sector going better than the real estate sector in the next 2 years. So positive in terms of the sector, but एक जरा खटकता है दिमाग में.
Absolutely right. I mean, the affordable segment is something that a lot of people are looking forward to. We have had policies in the past, but they haven't really worked they wanted. What is the big stumbling block, according to you, that is creating this kind of situation in the affordable segment?
I wish we all had the answers. I think the government would have had the answers ready. There are multiple factors as we see it. The first is land prices. The land prices have gone up much faster than what they should have. I'm not complaining, but the point is it has. So I think that's a challenge in the case of affordable housing. So we have to provide for land price subsidies, which will take care where you provide for affordable housing. Second, the PMAY scheme that has come up has addressed more than 1 crore houses in the urban areas. There's a second round of PMAY 2, but I don't think it's adequate enough to nurture this segment. We need to actually enhance that aspect of it. And the third, we need to see that there is some sort of subsidy which is given. I'll give you an example. During COVID, the government of Maharashtra gave a discount of 50% of stamp duty. They also reduced development charges by 50%. And in that period of time, affordable housing as far as Maharashtra and neighborhood grew quite substantially. So I think there are answers to it, but how do we go about it and do it? Because the government also wants to have money. I'll give you one example. In the case of high-priced housing, which we have in Mumbai today, and this is a question I'm always asked, 50% of the price of the apartment that I'm selling, the apartment I've sold for 60,000 rupees, 30,000 rupees goes to government. Whether it's in stamp duty, development charge, land under construction, cess, GST, etc., etc. You put all this together, and I'm paying to government 30,000. I'm not worried about the paying of 30,000. I'm only worried that if you continue to do so, you get a segment of housing which is going to be not affordable to the affordable segment. So that's the challenge. But the markets are lapping up those products. So government says, overall collections are going up, number of apartments are being sold, but that doesn't satisfy me. I think we need to take and pay attention to all this. Luckily, redevelopment, slum redevelopment is taking care of a part of this issue, but not adequate enough across the country. So fantastic market for real estate. Companies will continue to do tremendously well. Corporate entities will, I think, grow. At least 15% growth of all the larger companies' growth will take place in this current year. And the forward looking at this moment is actually doing it in spite of headwinds. So when the headwinds get out, it could be anything. Of course, there are challenges, but that's another story.
So you are saying that it's a real estate is a good asset for investors to be invested in, as always, because at least in major cities like us, real estate is something that has given good returns. Is this a trend you are seeing across the country in metros as well as in non-metros in smaller cities? How do you view the kind of shake-up that is happening in the hinterland, in other centers, and also both in the residential as well as commercial, because the data center is a big business that has come in. You yourself have a data center. GCC is a equally big business coming in. So give us a picture of that, please.
So real estate now has a broad picture. So we have residential, we have commercial, we have retail, we have hotels. Hotel segment is going to grow at least at 50% compounded per year for the next 3 years. So hotel sector is certainly doing it. Uh, the IT sector growth is still continuing to grow in terms of the GCCs and other things. Now, earlier, you had to buy your house in order to invest into it. Now, there is a different route. You can have an IPO, so you go to the stock market. You can go to a REIT, so that's the second market that is going to take place. Fractionalization will take place over a period of time. It's not yet really done. We're talking to SEBI. Hopefully, we'll able to get that also done. So I think all these segments of investments in the next couple of years is definitely going to do there. Also, the data center is going to grow. I think the growth of data center will be about 200% growth per annum for the next 3 years, at least. We expect from whatever the situation today, and that's not going to meet adequately the growth in this segment, because look at it today. India produces more data than the United States and China put together today. And we store only 20 to 25% of the data in India. So obviously, we have an opportunity to work this way and service not only India, but also overseas. So that's an opportunity which is there. And of course, with the AI coming in, the requirements of data center will still grow exponentially. The rollout of 5G is still not fully rolled out. I think that's going to take place. So a lot of these centers are there. There is tourism of different kinds. We have the sun and sea in terms of the coast. We have religious tourism, which is taking place. We have commercial units which are taking place. New centers are going to come up. For example, in Navi Mumbai, you'll have an Aero City kind of a thing. Alibag is going to turn into a tourism destination that we see. So all that is real estate packaged in different ways. Only the investment and the investor can now choose different routes to invest into the same thing, whether through 1, 2, or 3, or 4 methodologies in which you can invest, which was not there before. So I think that part of it is certainly going to grow in the next couple of years as we see it now. And most important, which I should have mentioned, is the fact that we now have a regulator. The Real Estate Regulatory and Development Act has actually brought about a regulator. So the kind of problems that we face for projects which are come subsequent to RERA are much, much lower. So where you would get multiple complaints for all the projects, we still have problems with projects, but it's just diminishing over a period of time as the regulator is done. And you have to remember, it's not like SEBI that you have one regulator in the country. Every state has regulators. So you have regulators who are excellent, like Maharashtra, and you may have certain states where the regulator is not as strong or forward-looking or thoughtful process. So again, regulation as far as real estate is concerned will be different in different states depending on how the regulator is empowered and being able to do it. But the positive angle is that you're more secure today than you used to be. That's the answer.
Great. In fact, you mentioned that the real estate sector always grows a little ahead of the GDP. And I know that you are a great commentator of the economy also, not just about real estate. And whenever we have met, I mean, that is one area where you have focused on. You would like to always talk about more about the country as well, just like the real estate. How do you see, the country's growth happening? We saw the Prime Minister raising some alarm, especially when the Middle East war was going on, that Indians need to be a little more austere. Of course, we are in better times probably now with the peace accord, but there is definitely a need to be cautious on the front because we import a lot, not just oil, but also fertilizers, etc., etc. So given all this, how do you see India's potential, the growth potential, also the consumption story holding up, in the coming days or months? How do you view that?
First and foremost, we have to congratulate the Prime Minister that he talked about Atmanirbhar Bharat. Only when Trump came in that we realized how important Atmanirbhar Bharat is. And thanks to Trump, we are now going to be faster being Atmanirbhar. Number two, energy is going to be a focal point. We will have to go into green energy, whether it is solar, whether it is hydrogen, or it is nuclear power. All these three factors will take place. The use of electric cars, vehicles will, in the next 2 years, become compulsory. You will have to stop producing any diesel and petrol cars. Vehicles will be zero.
You already drive a EV.
So I'm just saying that, irrespective of who drives what, we have to do it. There is no question about it. Energy will have to be green energy, and it will be self-sufficient in the next 5 years. We have no alternative. Earlier we thought it was 15, 20 years. Now I think we have to talk about 5 years, and we have to do it here and now. Whether it is nuclear, whether it is solar, whether it is etc., 1, 2 or 3, it doesn't matter. We cannot afford to rely on any external sources of energy in terms of it. It has to come. How we do it? Like we prepare for war, we have to prepare for this war also, because we cannot afford. India has to be Atmanirbhar in terms of energy. There's no choice. You can't do it. There's a second aspect of it which I think we have to do. Education. Today, education in the normal sense is fantastic. National education policy, everything is very, very good. But do you know, in skilling, we are horrible. Let's take the construction industry. Today, in construction industry, we are 2 million skilled construction workers short. 2 million today. So on one side you have unemployment, on the side we have 2 million workers short. A company called L&T CEO mentioned 6 months ago that L&T is 25,000 skilled construction workers short. 6 months ago. In the next 4 years, we'll be 5 million construction workers short if we don't skill these workers. And you'll produce graduates who are not going to get employed. And on the other hand, we are short of skilled workers. So we have to follow what Germany has done, what Japan has done in terms of various things, where we have to get into skilling in a much stronger way in order to do it. Otherwise, you'll become like Nepal, where you did a lot of education, didn't give them jobs, and you had to move the government out of the day. So it is very, very, very important for Bharat, for India to do skilling in a much bigger way than just the regular I have 45,000 students in my own colleges in Mumbai alone, the 14 colleges that I run.
But and you just got an approval for a skilled university.
Yeah, so we're now working on the skill university. Hopefully we'll do it in the next couple of months. The point is, we have to identify gaps. We have to identify the gaps of energy. We have to identify the gaps of skill education. We have to identify the gaps of mobility, which we are doing. Planning, ridiculous. Look at this place, BKC, the place of the world. Last week when I came here, it took me 45 minutes to go to the Western Express Highway. 45 minutes from the most expensive real estate in the country. Cannot be like that. We have to make those changes. So those gaps, see, we are growing beautifully. The country and the leadership is second to none in the world. I admire the Prime Minister doing. Now what we have to do is pick up these gaps and focus on the gaps. You can't have poverty of people who don't. If tomorrow my unskilled worker comes, I pay him 100, 150 rupees. If he gets skilled, I pay him 3, 4, 5 times the money. And I'm not getting him. It doesn't make sense. So what we need as far as India is concerned, real estate is concerned, all the development that we talk about and all the top line of the stock market and $5 trillion economy, we now need to focus on the gaps which are there and fill those gaps. If we fill the gaps, you will not only get prosperity at the top end, which is the country's poverty, but you will be able to get the per capita income also growing, not only wealth at the top end. We need to have wealth which is across the board, which is there, and we need to do that quickly. So one is the important factor of education, of energy. All these gaps have to be filled. And at the same time, how can you have Delhi having the kind of atmosphere where I get down from the car and I'm coughing because the atmosphere is there. So these are the couple of gaps. So while the leadership of India is beautiful, the growth is fantastic. We are working on defense. We are working on manufacturing. Everything is going so beautifully. These 5 or 6 gaps which are there, if we fulfill it, it will be a happiness index which will grow up along with the financial index of India. So we need to do that part of it very quickly because that focus is there, but it's not adequate enough. So we need to highlight those focuses and gaps that are there to make everybody, not the Desh Atmanirbhar, but a happiness index and the possibility of a prosperity down the line, which is second to none in the world. And the best part is we can do it. See, बोलने में कुछ, it's okay to keep talking. We are very good at talking. I'm also very good at talking. But this is one of those things which we can do. So my worry is not about the fact of something we cannot do. Can you create petrol? Answer is no. So we need to work on the alternatives faster, quicker, better. But I can promise you that the country is growing great. Real estate is fantastic. Next couple of years, you don't have to worry because I'm speaking on it. But I can tell you, just watch it. It's going to grow beyond what you think it will grow.
That is a great, point of optimism. One final word from you, Dr. Hirandani. We have so many people who are looking to invest, maybe already investing in real estate in the markets as well as in REITs. Could you share a couple of key things that a person who is stepping in new, a new investor, a retail investor, should keep in mind? Maybe a few words of wisdom from your side would be helpful for us.
Well, it depends what you are. If you're so wealthy, then you can build an Antilla. So that's one part of the whole thing. But having said that, I think in India, because we don't have social security yet, everybody has to invest into a house, physical house also. Fortunately, we have tax benefits. The interest rates on home loans is the lowest in India as compared to any other loan that you get. You get 20-year loans which are there, possibility to do it, and you're able to create an asset. If there is inflation, which it has happened in the past, recent past over there, the house is a great inflation assurance. Rentals in important areas are going to go up over a period of years. So if you're living in rental alone, after 5 years, you may not be able to afford the rents that you are paying today, may go up in those areas. Alternative places will be there, but you really need to do. So one, I think you need to do it. The second, it depends also on the type of investment you want to do. So let's say, for instance, my in-laws are staying in Chembur. So obviously I'll buy in Chembur. But the growth in Chembur may not be at the same pace as you would get in outlying areas. So let's say Mumbai 3.0 or Panvel or Alibag, the prices are likely to double in the next 3, 4, 5 years. But if you buy in Chembur, you're close to your families, you got to education, you have been brought up there, you're comfortable, so you're going to be buying in Chembur. So depending on where you are, and do it. Number 3, many people are buying a house in a place, but actually working in some other place. So they go and do a rental in the third place. So over a period of time, you're going to see serviced apartments coming up in all the segments of it. So the next target really is going to be co-living, serviced apartments which are going to take place, campuses where a lot of these there. And also you're going to see serviced residential apartments which are going to come up, branded service apartments are going to come up. So different investments, you can You can invest into serviced apartments like you have invested in Dubai. Many of them have done. You can do that investment. So the outlying areas of cities like Mumbai, like Delhi, like this, the outlying areas prices are more likely to go because infrastructure is growing very fast there. So the price lines are going to do much better than they would do in the city. But of course, the city prices are also high. They are not likely to become double because you have invested in the city because they are already high. So you can't possibly. So investor would move in the outlying areas while this is there. But everyone should buy a house. I'm in that business too.
Wonderful. It's great to hear from a person who has redefined the real estate in this country and especially in the city. And a big round of applause to Dr. Niranjan Hiranandani. For Thank you so much.